Thanks for clicking. My name is Mark Mitchell. I'm a mortgage broker here in London, Ontario. There have been a growing number of reports showing that by 2026, the older generation of Canadians will transfer nearly $1 trillion worth of wealth to the younger generation. As parents and grandparents retire and pass on, the large amounts of wealth made throughout the 20th century are going to be transferred to their kids. It comes as a little surprise then that a report being released today by CIBC shows that parents transferred over $10 billion to their kids via gifted down payments over the past year. As the price of Canadian real estate has skyrocketed over the past few years, parents have stepped in to fill the void and make those real estate purchases a little bit more affordable for their kids. So what I want to do today is go through the findings of the report, as there's been a significant upsurge in the amount of money being gifted for down payments. I want to go through some of the problems or big problem that I see with the report. And then I want to go through some tips as to if you are gifting a down payment or you're receiving a gifted down payment, as there's some very specific lender requirements in order to facilitate that transaction. We do have the Bank of Canada coming out with their monetary policy report on Wednesday, and it's highly expected that they'll have a report on Canadian real estate, as well as some predictions as to where they see the market going. And we have our weekly China update on Friday, so make sure you click like and subscribe to get those updates. But for now, let's get into these gifted down payments. As you might expect, although the amount of parents gifting their kids the down payments for the purchases of their first homes hasn't gone up, the amount of money that is being gifted has gone up quite substantially over the past few years. While in 2015 it was only $52,000, only $52,000. What a world. As of 2015, it was only $52,000, but as the time of the report, the average amount of gift down payment that parents were providing to their children jumped up to $82,000. That's almost a 60% increase in 6 years. $82,000, that seems like an awful lot, and it is, but the report notes that that $82,000 average was only for first-time home buyers. When you look at people looking to upgrade, children looking to move from, their first house to their starter house to their forever house, parents are gifting on average $128,000. So while you might expect that first-time homebuyers might receive the largest amount of gifts, that's actually not the case. It's actually those looking to upgrade, those looking to buy potentially their forever home, that are receiving the most amount of parental support. This is kind of counterintuitive, as you would think that people who already have homes and have gained a bit of equity over the past few years would just transfer that equity to their next home. But it looks like parents are using this opportunity as a way to provide maybe an early inheritance to their children, and those children are using that money to get into that next level home. Before moving on to the problem with the report, though, I did find one other part very interesting, and that's where the source of funds are coming from. I noted at the beginning of this video that parents had about $1 trillion they'd be transferring to their kids, and this report definitely bears that out. There's a lot of misconceptions out there, I think, that parents borrow money or refinance their own houses to transfer it to their children, but this report says that only about 5% of the cases are parents borrowing their money. So the parents are actually using cash or, say, investments that they're sitting on to gift the down payment to their kids. So it's not so much parents borrowing money as it is transferring money, or, like we said, even early inheritances to their children. And this leads us to a big problem with the report. Not really a problem, but an issue of directionality, which I think is present in this report and isn't present in a lot of the news articles that have come out over the past few months about parents helping their kids with down payments. There does seem to be a narrative in a lot of the articles and this report that's out there that because houses have skyrocketed so much, that parents have had to step in to fill the void to help their kids be able to afford these skyrocketing houses. But I think what is rarely discussed, and probably also as equally true, is that parents stepping in to fill this void is actually creating a lot of these price surges. I don't think it's purely creating it, but it's definitely contributory. If we accept the idea that low interest rates, are helping fuel the housing boom, well, low interest rates are cheap money. Nothing's cheap. No money is cheaper than free money. So, if parents have this $1 trillion that they are transferring to their kids in order to give them more buying power, Well, that's having better than zero interest rates. That's almost having negative 100% interest rates because you don't have to pay back any of the money. Injecting that kind of buying power into the market is obviously going to have a major effect on prices. Just as we see prices move higher and higher as interest rates go down, and we see prices slow down or go lower as the stress test was introduced. Availability of money does have a direct impact on house prices. When we're looking for what is causing this housing crisis, whether or not it's a problem with supply, it's a problem with interest rates, immigration, Chinese investors, etc., 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 this is probably definitely one of the causes. Not the only cause, and probably not even the primary cause, but definitely is a contributing factor, given that that's an extra $1 trillion entering the market in a non-traditional manner. We haven't had this much money, this kind of intergenerational wealth transfer ever in the history of Canada. It's being called a once-in-a-lifetime wealth transfer. So, of course, this is going to definitely have an effect on house prices, and it definitely does need to be considered when we're trying to explain it. Not for reasons that we should stop it. I'm not saying that. Again, I'm not taking a position on this whatsoever. But before we blame everything on supply and look to change our supply standards, or before we blame the entire crisis on interest rates and raise them maybe sooner than we should, and I'm not saying that we shouldn't, I'm just saying we need to incorporate this into our full understanding of the housing market the way it is. Speaking of the housing market, of course we're speaking of the housing market. Speaking of the housing market, I want to go over some very brief tips for gifted down payments if you're receiving or you're giving a gifted down payment. The first is who can give a gifted down payment. The banks and the mortgage lenders require that it be an immediate family member. That's mother, father, sister, brother. So your uncle's friend's cousin can't gift you your down payment. That's not allowed under the mortgage rules. Second, the banks are going to want to see a gift letter from that family member saying that the gift is being gifted with no strings attached and non-repayable. So there's a big difference between a loaned down payment, a borrowed down payment, and a gifted down payment. The banks want to know that it is a gifted down payment, and it won't be needed, and you won't need to pay it back to said family member. As far as gift letters, most mortgage lenders have a standard template. Reach out to your bank or mortgage broker to get that template, but the gift letter will state that it's a non-repayable gift. Third, the lenders will want to see where the money came from, in that they'll want to see that it was deposited into your account. Some lenders will ask to see the bank statements of the person giving the gift. The lenders don't always ask to see it, but definitely be prepared for yourself and for whoever's gifting the down payment that the lenders could and have every right to ask to track the source of the down payment all the way down the line. So they could ask for 3 months bank statements, etc., etc. I think the biggest takeaway from this report is adding to our understanding of what is going on in the housing market. Obviously, yes, there are major issues with the housing supply, and I think our politicians and all the reports by the banks have borne this out. I do think that supply is a major contributing factor. I also think low interest rates are definitely a contributing factor, as it's made it so easy and inexpensive for people to borrow. And obviously, overseas investment is definitely a contributing factor. But when we're looking at the price of our houses surging, and they've definitely been going up massively over the past couple of years, I think we're at 20% year-over-year increase just here in London. Even then, I think it's even a little bit more than that. But when we're looking at why these prices are surging so much, there's $1 trillion there that I think we really need to account for, as $1 trillion is a huge amount of money, especially in an economy as relatively small as Canada's. So, when we're trying to find out why the causes are, why something is happening, it's important that we understand the whole causes and not just a couple of them. As I mentioned at the beginning of the video, we will have our update on the monetary policy report being released by the Bank of Canada on Wednesday. Make sure you click like and subscribe to get those updates, as I think there'll be some really good information in there. And thanks for watching.